Welcome to Finpod, your daily financial digest. I am Evan, and today we are breaking down a massive morning in the markets. Before we dive in, remember that Finpod is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. The biggest story this morning is the divergence between two tech titans. Microsoft is soaring nearly 9% this morning after a strong earnings report, where Azure cloud revenue hit a massive milestone, crossing $100 billion in annual revenue. Investors are breathing a sigh of relief as the company also hinted at a more disciplined approach to capital expenditures. On the flip side, Meta is down nearly 10%. While their revenue growth was solid, investors were clearly spooked by an earnings miss and, more importantly, the company's aggressive and costly AI spending plans. Moving to the chip sector, Qualcomm is sliding about 3.5%. The company warned that memory costs are rising and that their share of chips in the next iPhone will be lower than previously expected, leading to a weaker than hoped for profit forecast. Meanwhile, ARM Holdings is actually jumping over 11%. Despite some royalty growth concerns, the market is cheering their record revenue and the firm's growing confidence in its new AI-focused CPU business. Finally, Robinhood is up slightly, holding steady after a record earnings beat that showed their business is firing on all cylinders, with record net deposits and growth in their premium subscriber base. Looking at the broader market, U.S. futures are pointing to a positive open today. The main catalyst is the relief rally sparked by Microsoft's strong cloud performance, which is helping to soothe investor anxiety regarding the return on investment for AI infrastructure. The Fed held rates steady yesterday, keeping the market on edge, but the focus has shifted back to earnings and upcoming macro data. Globally, markets remain cautious due to ongoing geopolitical tensions in the Middle East, which are keeping oil prices in focus. Investors are keeping a close eye on upcoming economic data prints, with consensus expectations looking for clarity on inflation and growth trends. In the AI economy, the narrative is shifting toward efficiency. Beyond the big cloud providers, we are seeing more partnerships like the one between Leidos and CoreWeave to bring secure AI to government missions. We are also seeing a continued push for responsible AI frameworks in banking, with companies like TD Bank formalizing their principles. The sector is maturing, with less talk about pure hype and more focus on integration, trust, and managing those massive compute costs we've been discussing. For stocks in focus, besides the major tech names, keep an eye on industrial and energy sectors as they react to the broader market sentiment and shifting macro risks. Today is a busy one for earnings. We have big names reporting after the close, specifically Apple and Amazon. Investors will be looking for any commentary on consumer demand and AI integration. Before the bell, we saw MasterCard report, and Stryker is on deck for after the close. It is a critical day for the market to see if the AI optimism can hold up against the broader economic uncertainty. That is it for today's episode. We covered the tech divergence between Microsoft and Meta, the chip sector shakeup, and the heavy earnings calendar ahead. If you enjoyed this, please like, share, and subscribe, and leave a comment if there is a specific stock or sector you want me to cover next time. For stock recommendations, visit Fintwit.ai. Thanks for listening, and I will see you back here tomorrow.